here we go. So yeah, this is Tax and Business Basics for Small Business. My name is Stephen Taylor. I'm the Education and Outreach Coordinator for the Idaho State Tax Commission. And here's what we're going to be talking about as far as my portion of the presentation today. We'll be talking about registering your business, the process to do that, how to get your permits, what to do once you start selling products, some important information about employees versus independent contractors. We're going to walk through a bit about tax withholding and then income tax and forms for employers that you need to be aware of. And then we're going to revisit some of the electronic access tools that you have that will make your life easier. So this first part, registering your business. When you decide you're going to do a business, one of the first things you want to do, as far as we're concerned, is register and name your business with the Secretary of State. Now, it does cost a little bit to register your business. That cost varies depending on the complexity of your business. I just did a sole proprietorship voiceover, and I believe it was $25, might have been $20, to register my business with the Secretary of State. But that's just me as a sole proprietor, pretty simple. If you're doing an LLC or an S-Corp or something like that, it could be a little more expensive because it's a little more complex. I would also recommend getting an EIN from the IRS. It's a lot of three-letter acronyms. They're not required unless you have employees. But if you don't have one, you're going to need to use your Social Security number for business purposes, and I really recommend against that. The nice thing is that EINs are free and they're easy to get, so I would recommend getting it even if you don't need it right away. And just as a side note, some banks are going to require an EIN to open up a business account. So you might as well get it. And then we're going to apply for permits. We're going to do that through the IBR, also known as the Idaho Business Registration page. I will walk through how to get started doing that here in just a second. And then once we have our permit numbers, I would really recommend getting a TAP account, or Taxpayer Access Portal. We do like our three-letter acronyms here. Taxpayer Access Portal is a way to file your returns, the ones that we're going to be talking about here, to file them electronically. It's much faster and it's a lot less stress. So 3 and 4, your permits and your TAP account are going to take a little bit of time. So while you're waiting for that, I really recommend getting a website built. Now you can build it yourself. If you know how to code, you can build it from scratch. If you're not quite that adept at that, and I'm not, so I used a business to do it. There's a lot of them out there. There's Wix, GoDaddy, there's a bunch. I don't remember which one I used. But I really recommend building a website. It's almost a prerequisite now. When people hear about your business, they automatically go, well, what's on their website? Let's see what they're offering. Let's see what their hours are. Let's see where they're located. That's a big one, particularly for restaurants. I've seen a couple of new restaurants here where they've created a website, so I go to check it out, and there's no location. Like, well, we don't know where you are. It's very hard to give you money if we don't know where you're located. And then the last thing would be to open up a business bank account. I'm going to really recommend that you keep your business funds and your personal funds separated. It's much easier accounting-wise. It's much easier if people come asking questions. It's just easier overall to have two different things. So once you get that done, we're going to need to get we're going to get your permits or your account numbers. And so where are we going to do that? We're going to go to tax.idaho.gov. This is kind of the clearinghouse for all things tax commission. We're going to look at where it says business, which is right in the middle, and we're going to go to getting tax permits. So once you click on that, it's going to take you to this page. And this walks you through the information and what you're going to be needing and the questions that are going to be asked and that sort of thing. There are two sections to this. The top part is regarding new businesses, and it walks through what to expect. And if you scroll down from here, the second half of the page is existing businesses. So the reason this is broken out this way, if you're a new business and you need to get your permit numbers, that's great. This is where you'll go. If you've already gotten permit numbers, so let's say I, as a sole proprietor, went through, I got my permit numbers, but I didn't have any employees. So I did not get a withholding permit. So that being the case, I didn't have to worry about it. It was just me. But business has improved. I need to hire employees. I'm going to need to get a withholding permit. So to get the withholding permit, I will go back here where I got my permits initially, and I will create a new account or do a new application and answer the questions the way I answered before, but just answer differently for the employee ones, and then I'll get my withholding permit. Once you've submitted an application, you can't edit it. Once it's submitted, it's locked, so you'll have to create a new one if you need to make changes. And that's what all of this is explaining on this page. So what we'll do to begin with, we're going to click on the green box here, the Idaho Business Registration or IBR application. And that will take us to this page. Now, to begin a new registration, we just create a new account. If we're returning to complete a registration or we want to check on the answers that we gave previously, we will click where it says username and password, type in the information that we created, and we'll go back to our in-process registration, or we can view the one that we already completed. For us, we're going to create a new one, and then this is where you'll begin your adventure. The first thing you're going to do is create a username and password, and then you're going to start answering questions. Now, none of these questions are designed to trip you up. These questions are there just so we can see how your business is going to be organized and what you're going to be doing with the business, so we know what kind of permits you need. Okay? This is going to go to the Idaho Industrial Commission, the Idaho Department of Labor, and then the Idaho Industrial Commission gets it last. So you may see permits from those other entities first before you see the permits from us. Okay? Now, if you have any questions about the IBR and how to fill it out, we do have a webinar that walks through that. I actually walk through completing an IBR application. I think the next one is November 5th for that. It's the next one I have scheduled. So my friend started a business. This is a question from Erica. My friend started a business but doesn't have an account number from the state unemployment. Can we just call to see if it was created or not? Yeah, if you could, did you complete an IBR application? Or your friend, did they complete an IBR application? Okay. Yeah, I would probably call and see if we can find it. Janet, would they be able to track this down with just a name, or Mark? Hi, Mark. Mark's another subject matter expert. I double booked apparently.
They would be able to track it down. My question would be as if she was requesting a withholding account and a sales and use. If no withholding account, then no unemployment. But they can call the unemployment office.
They should be able to track it down. Do you know, did she get her seller's permit numbers? She does have a withholding account and sales permit.
Yes, she should have gotten an email and a account number from Department of Labor, and I will put on the chat their phone number.
Okay. Yeah, just have her call them and they should be able to track it down for her. Thanks, Janet. Okay, so we talk about this getting seller's permits with the most common one that everybody gets, and why are we doing that? Well, Idaho has a 6% sales tax on all tangible personal property. Now, this tax is not part of your income, it belongs to the state, and you're just collecting it for us. And I want to say thank you for that. I really appreciate it. But what is tangible personal property? Well, it's anything that you can touch, you can pick up, carry, eat, otherwise handle, that's not including real property. And then generally speaking, services and labor aren't taxable in Idaho. So if you're actually selling things, then you're going to need a seller's permit. So who needs a seller's permit? Like I said, any sale of tangible personal property that you make in the state of Idaho is going to require you to collect sales tax. Now, if you are required to collect sales tax, you're going to need to have a permit number because you're going to be required to remit or pay that sales tax that you collected to the state. And in order to do that, you will need to have that permit number so we know where it came from and where it's supposed to go. So it says here, unless there's an exemption. There are a lot of exemptions. There's exemptions. There's scenarios where we will not collect sales tax. One of the most common scenarios that we see here, just because of where we're located, is whether or not we're going to charge sales tax on goods that were shipped to another state. So you're going to charge Idaho sales tax if the buyer arranges shipping, or they pick up the goods. And you're not going to charge Idaho sales tax on goods that were delivered to another company. Reading is a problem today. You're not going to charge Idaho sales tax on goods that were delivered to another state, either by a company vehicle or by common carrier. The key difference here is where the customer takes possession of the product. If you deliver it or you arrange shipping to another state, you or your agent still have possession of it until it reaches the final destination in the other state. So the transfer of the property takes place in that other state, so there's no Idaho sales tax that's due. Now, if the buyer comes to Idaho to pick up the goods, or they arrange for the shipping, they took possession in Idaho, the transaction is taxable in Idaho. And Idaho does not exempt buyers from non-taxing states. If they buy products in Idaho, they are subject to sales tax in Idaho. So that's whether you should charge Idaho sales tax or collect Idaho sales tax. But if you're shipping a lot of goods to a specific state, research that state's thresholds for sales tax. The Wayfair versus South Dakota decision several years ago allowed states to collect sales tax for items that were shipped into their states, but each state has different requirements. So you need to do a little bit of research as to what that requirement is, because you may be required to collect sales tax in another state where you're shipping goods. And if that's the case, then you'll need to go through the permitting process in that state and then learn how to remit those taxes back to that particular state. It involves a little bit of research and some time. It's not an impossible task. You just have to stay on top of it. And there are actual companies that will help you with that too if you do a little bit of research. The nice thing, if you're using a marketplace to sell your goods, so Etsy, things like that, check to see if they're collecting the taxes for you, because most of them do. They collect them and remit them on your behalf. Let's see, Erica's question. So if I sell wholesale, do my customers need to fill out an ST-101 and mark the out-of-state reseller if they are arranging pickup? That is a great question. I'm going to let Janet answer.
If they're reselling, whether she sells to them wholesale, if they're reselling to the end user, then they do need to fill out a ST-101. Now, if they mark it as a wholesaler, but yeah, I think they would need to fill out a ST-101 just to, she shouldn't have to fill one out for her vendors, but.
Right. So anybody who doesn't know what an ST-101 is, it's a sales tax exemption certificate, and I will walk you how to fill that out here in just a second.
Oh, Steve, if they're out-of-state resellers,
yeah,
and she's selling to them, no, then
well,
if she's shipping to them and shipping out of state, it goes to what you said about shipping out of state to check that state's threshold.
Yeah.
Right?
What if the customer is coming into the state and buying products from her as a wholesaler?
And they're out of state resellers?
Mm-hmm.
They would need to fill out a ST-101.
Yeah.
And I believe there's something on there that says out-of-state reseller.
Yep. All right, so let's talk a little bit about invoicing and receipts. There is some, shipping out of state, but they're arranging to pick up. They schedule the freight. So yeah, technically they are taking possession of the product in state, so they will need to give you an ST-101 so that you don't have to charge them sales tax. that was for Erica, sorry. Okay, invoicing and receipts. There are some things you need to be aware of here that are going to make your life easier, particularly if people come asking questions about your sales. Some things you need to be aware of. Sales tax must be a separate line item on an invoice or a receipt. Includes tax isn't acceptable, and you can't advertise that you're going to pay the sales tax for the customer or advertise that there is no sales tax. Okay? So what do I mean by this? Well, this is a sample invoice from Awesome Auto Repair. Simple brake job. You'll see here where there's 2 brake pads at $50 a piece and 2 brake shoes at $100 a piece. And in the invoice, those 2 things are marked T for taxable because those are tangible personal property. You can actually pick them up, you can carry them, they're stuff. Okay, so those are taxable. The labor itself at $100 is not taxable because we don't tax labor in Idaho. So what we have is a subtotal of $400 for the brake job, $300 of it being taxable. So 300 at 6% is $18. So the total due is $418. If possible, this is how you would like to have your invoices and your receipts set up. So it is clear what was taxed and it is clear how much you collected. And this is mostly to cover yourself if people come asking questions, but also if for some reason, and I hate using this word, but if for some reason you get audited, and it's pretty rare, but it does happen sometimes. If you have them set up like this and you can pull these records up and they're like, hey, we want to see your invoices from October of 2020, you can pull up your invoice and say, here's all the stuff that I did in October, and it says exactly how much I collected. This is exactly how much I remitted. Easy peasy. People get into trouble when they don't have records like this, where they can't verify what they collected. Right? Questions on the invoicing? A receipt should be similar to this. Okay, so here's this ST101 that Erica was talking about a little while ago. This is a sales tax resale or exemption certificate. Okay. If you're buying for resale, you're wholesaling or you're producing items for sale, or if you have a statutory exemption, you can buy your products exempt from sales tax using this form. You may also receive these forms from your customers, so you're not required to collect tax from them. Carol has a question. When is labor taxable? I don't know if there are specific examples when labor is taxable.
If you're manufacturing a product and the labor is part of, you're going to sell that product, a cabinet for $40 or $400, that labor in manufacturing that product is part of the total sales price of that product. So the entire amount for that cabinet is taxable because you're selling that cabinet as a item, if that makes sense.
Yeah, I think they got both questions. So one was, when is labor taxable? And then Carol asked the other one, if you're manufacturing product at labor cost, which is what you just talked about.
Yeah, and then outside of manufacturing or even production, labor is not taxable.
So yeah, is it taxable on repairs?
No.
Nope. Good.
No. No, just the parts. Say the auto that you were just looking at. Only the parts are taxable, or sometimes supplies, etc. But labor is not taxable.
Oh my goodness, we're getting a ton of questions. Excellent. So there was one of them about delivery. Is the delivery from our store location to the customer's place taxable? That's from Anna. It's a great question, Anna.
And that one, Anna, I would almost have to look up. I believe if it's listed separately as a delivery fee on the invoice, it is taxable. If it's part of the price, part of the total sales price or product inside the product, then it wouldn't, you know, it would be, I would have to look that up. If you can email your phone number to Steve, and I'll try to look it up by the end of the thing, end of the webinar. As far as the contractor operating a handyman business, all of your materials in Idaho, the contractors consider the end user. And you pay sales tax for all of your materials. You don't charge the customer tax. A lot of contractors will say, I paid $1,000 for materials, and the cost of my materials that I'm going to move on to the customer is $1,060. But you cannot separate it and charge the customer sales tax.
Right. So you'll actually include it in your job price. That makes sense? Cool. Okay, so yeah, this is the ST-101. You can use this to buy your products for your business and not pay sales tax. Customers can also give these to you, and you don't have to charge them sales tax for their purchases. There are 4 pages of instructions for this sheet. They explain some of the instructions, or some of the exemptions, I'm sorry. Now there is another one that looks just like this. It's called the ST-103C. This is for real property contractors. So if you're a contractor buying for resale, or you have a statutory exemption, you can buy your product exempt from sales tax using the ST-103C. Now you may also receive these from your customers. Okay? They both get filled out the same way. You fill out your buyer's name and your seller's name, address, city, state, all that. The ST-103C has just 1 page of instructions. It's pretty focused. But what you'll do, you're going to see the ST-101 most of the time, so I'm going to walk through that. You'll fill out the buyer and seller's information. Now, for most of us, it's going to be either buying for resale or doing a producer exemption. So you're going to fall into one of the first 2 categories on the page. You only need to fill out 1 section. So even if you have a seller's permit and you're a producer, you don't need to fill out both sections. So if you're buying items for resale, you'll select the first section. If you sell retail in Idaho, you're going to need to include your seller's permit number. And then sellers qualifying for other exemptions may not need that permit number. But you'll just, for most of us, we're going to put in here where it says, I'll sell, rent, or lease the goods I'm buying in the regular course of my business. And then it's either A or B. Most of it's going to be A. We're going to list the primary nature of our business in that little box right there. Describe the products that you sell, you rent, or lease. Again, there's not a lot of room, so be, succinct. And then we're going to check the box that applies to us. For a lot of us, we're going to be an Idaho registered retailer, so we check that box, and then we would put in our seller's permit number. The one that Erica was talking about, they would be out-of-state retailers with no Idaho business presence, so they would check that box. Now, if you're a producer, you wouldn't need the seller's permit number to get the exemptions. I mean, you'd still need it if you're going to be selling the products you make, but this will allow you to purchase your supplies without paying tax on them. It doesn't apply to everything that you buy, just to the supplies that are directly related to your business. So you would fill out section 2. So in this case, we'd do the producer exemption. We'd put here what we're in the business of producing, and then we would simply check the boxes that apply to what we're doing. So if you are in ranching and farming, you can check both boxes. Check as many as you need to. And then you hand that to the retailer, and generally speaking, what they do, particularly like Tractor Supply, they assign you an account number. It's a phone number for Tractor Supply, and then they basically attach this to your phone number, account number, and then when you go in to buy things, they'll ask you if you have an account number. To pull it up, you'll give them your number, and they say, oh, we see you have an exemption. Does this apply? Yep, okay. And they already know not to charge you sales tax. As a retailer, hang on to these if somebody gives them to you. This is your verification that you don't need to charge them sales tax. So hang on to this, and however you want to do it, but you need to keep track of your non-sales tax sales. So I would attach a copy of the invoice of each sale to them so you can keep track of them, however you want to do it. But you need to hang on to these things. You don't have to remit them to anybody, but they're your verification of why you didn't charge sales tax. That makes sense? You don't need to get one every year. They don't expire. Great question, Erica. So you can hang on to the same one for the same person for 20 years. They don't expire. Some businesses will send you an updated one every year. When that happens, you just get rid of the old one and just start using the new one. There's no account numbers or anything listed on these things. So these are just the information about who purchased from you. Okay, let's talk about reporting. Some things you need to be aware of. Sales tax is due in the reporting period that sale took place. You can't defer that sales tax, and you're required to file a return even if you've had no sales. So this is super important for both sales tax and withholding. You need to file the return. If you have the coupon to do a return, make sure you complete it. Even if you didn't have any sales, even if you didn't have any withholding for that period. If you don't file, then we're going to think you forgot, and we're going to assign values. Those values will not be zero. So you'll end up owing, and then it's just a big hassle. It is perfectly fine to file $0 returns. I do it a lot for my other business. It's a cyclical business, so sometimes for several months in a row, I don't do anything, so I just file $0 returns. It's perfectly fine. But you want to make sure that you do it. You don't want to blow them off because you didn't have any sales. Okay? So to report your sales and use tax, you're going to use a Form 850. This gets sent to you. I believe they come in groups of 3. This is what they look like. It's an Idaho sales and use tax return. You'll notice that your permit number is on there. The reporting period that it is for is on there. The due date, if you are mailing this in, that due date, so October 21st of 2023, as long as this thing is postmarked by that date, you're fine. Okay? So how do we fill this out? Well, we're going to be taking a look at the stuff on the right side. And if you have accounting software, you can just pull up a report for that reporting period. So this would be September 1st to September 30th of 2023. We pull up all of our sales, and then we start plugging in the numbers. First one would be total sales. So we had $1,025 worth of sales for September in 2023. We just pulled that from our accounting software. Non-taxable sales that we had. So these would be sales where somebody purchased something from us. They used an ST-101. Okay, so we didn't charge them sales tax. In this case, we had $50 worth of sales for September that were not charged sales tax. So we need to be able to back that out of there. Okay, because that part of the total sales was not taxable. So that we put our number in, and then we just do what it tells us to do. We subtract line 1 or line 2 from line 1. So that gives us a total of $975 of net taxable sales for September. The next thing is going to be items that are subject to use tax. Use tax, to be greatly simplified, is something that you should have paid sales tax on, but you were not charged sales tax. In this case, we bought a magazine subscription for $25, and they just charged us a flat $25. They didn't charge us sales tax when they should have. We need to add that in here. It could be a magazine subscription. It could be a car, right? You bought a car secondhand for $1,500, and they just charged you $1,500. You didn't pay sales tax on it. Well, you would enter that here because you should have. So you would add that in, and then again, we just do what it tells us to do. So now we have a very convenient $1,000 for total taxable for September. Tax is 6% on that, so that makes it $60. So that $60 should be the taxes that we collected for our sales for September. Now the next line is going to be adjustments. Adjustments occur when, for example, you sold a product and collected taxes on it, and then after you filed the taxes, the customer returned the item. So you refunded them their money, including the sales tax, but you've also paid that tax to the state. So now you've paid the tax and you've refunded it back to the customer. So this is where you would claim that back on this line. You will need to provide documentation in order for this to be approved. Okay. For our example right here, we don't have any, so we're just going to put zeros, and then we'll carry our total forward. So we still have $60. The last two before our total due are going to be penalty and interest. If you file late, penalty and interest may apply. We're going to suggest that you file the return without including the penalty and interest and let us calculate it for you. But if we do tell you that you owe penalty and interest, make sure that you address it. You either contact us and dispute that, or you pay it. If you ignore it, it is not going to get better, and we are not going to go away. Okay? Everything has been fine in September. We don't have any P&I, so we have zeros. So the final total due is going to be $60, and this is what you would remit back to the state. You have your final balance. You'll send it along with the form to file your taxes. And remember, these are taxes that you collected from the customers. Okay? These are not coming out of your profits. It's a pretty simple form. It's much easier if you have a good point-of-sale software or accounting software that you can keep track of things. I mean, I know people who use a ledger and a pen and paper to keep track of their books, but it's a lot easier now for most people with computer software. And it could be Sage, it could be, what are some of the other ones? QuickBooks, there's all kinds of them out there. I have used several in my life, and they all get the job done. Any questions on that? Oh, Janet posted the rule for you. It says this is Rule 6105, Statute 63-36.12. A customer orders building materials from a retailer. The retailer delivers the goods to the buyer by means of the retailer's delivery van. The retailer separately states the charge for transportation and handling of the building supply materials. Since the charge is for delivery to the customer, it is not subject to sales tax. So delivery charges are not subject to sales tax. Thanks, Janet. Perfect. Okay, let's talk about employees. So becoming an employer is a huge deal. Congratulations on that. It means your business is growing. So what if I paid sales tax on items that should be tax exempt? There is a form you can fill out. Janet, do you remember the name of the form? I want to say TNR, but that's for pet rescue. Trap, neuter, and release. I don't remember what the form was called.
I'm sorry, for what I was in the
for getting
bill.
money, sales tax back on items that you shouldn't have been.
I'm sorry, TCR.
TCR, there we go. No, it's not TNR. I knew that wasn't right. Yeah, there is a form. It's called TCR. You can fill that out, and you can get that back that way. Because the ST101s, I don't know if I made this clear, the retailer does not have to accept those. Okay, there's no mandate that they have to accept an ST101 from you. So they may choose just not to do it, so they don't know what to do. Or they're busy, or they just don't want to. So you'll get charged sales tax anyway. If that's the case, you can fill out the TCR and get it back. I don't think that's a good business decision. So what I would recommend, if you are a business, have anybody who handles cash registers for you or anybody who handles the money or interacts with the customer, have them familiar with what that ST101 and the ST103C are and how they work and what you want them to do with it. Because the last thing you want is to lose a sale because somebody doesn't know what to do. Okay? Okay, so becoming an employer, huge step. There's some things you need to be aware of. Now, you may be tempted to classify your employees as independent contractors. And this is because you're required to withhold payroll taxes for employees, but not for contractors. You need to be aware that the IRS has guidelines for who's an employee and who's a contractor. And in most cases, you're going to have employees, which means you'll need to withhold taxes for them. Okay? Luis is going to go through this in a little more detail, but here's just a list of things that determine whether they're employees or independent contractors. So you need to be aware of that. And then employee withholding, so income tax withholding. Income tax withholding shouldn't be confused with your business's income taxes. Withholding isn't your money. Withholding is your employee's money, and you're sending part of it to the state and to the IRS on their behalf so that they don't have a huge tax bill at the end of the year. Okay. So when do you need to get a withholding account? If you have one or more full-time or part-time employees working in Idaho, you're going to need to have a withholding account. You need to get that withholding account established before you hire your employees. Remember that it can take several weeks to actually get that permit. So there does need to be a little bit of planning. Okay? Anybody remember where to get the withholding account or withholding permit? Silence. So you'll get your withholding account or withholding permit number. You'll get that by completing an IVR. This might be one of those times if you started off as a sole proprietorship and you got your seller's permit number. When your business expanded, you'll need to go through a new one, and then you'll get your withholding permits that way. So what do you need to withhold on? Well, obviously wages. So all wage income is subject to Idaho income tax if the employee earns that income while they're here. Now this is going to include employees who aren't residents of Idaho, employees who are family members, people who work only one day in Idaho, or people who aren't citizens of the U.S. unless they're exempt from federal withholding. You're also going to need to withhold on wages that are paid in kind. So these are wages that you pay employees in something other than money. So goods, lodging, food, personal use of a company vehicle is a pretty popular one. Generally, you have to withhold Idaho income tax on the fair market value of such payments when you make them for services your employee provided in Idaho. Now, there are some exceptions. For instance, you don't have to withhold Idaho income tax for food or lodging provided for the employer's convenience if the food or lodging qualifies for an exclusion from wages under federal law. So if you bought your crew pizza for lunch one day because they've been doing a great job, you don't need to add that as wages to them. You don't have to withhold on the value of the pizza. Okay. Also, supplemental wages you'll need to withhold on. So these could be bonuses, commission, severance pay, back pay. If you're paying out accumulated sick leave, all of that needs to have withholding placed on it because it's all wages. You do not have to withhold if you have an employee who's, let me start again. You don't have to withhold if you, I've screwed it up twice, wow. Employers have to have a withholding account and report payroll, but you don't have to withhold on Idaho income tax if the employee isn't a resident of Idaho and they've earned less than $1,000 in Idaho in a calendar year. If you employ an agricultural laborer who's earned less than $1,000 in a calendar year, or if the employee is exempt from federal withholding. That was a struggle to get through that. I rewrote this, and I've been going on muscle memory. You also don't have to withhold if the employee is an enrolled member of a federally recognized American Indian tribe, they've earned their income on a reservation, and they live on a reservation. Also, if you have an employee who gives you an Idaho W-4 stating that they are exempt from withholding because they didn't owe Idaho income taxes in the previous year and they expect not to owe in the current year. Now, this exemption is only good for the current year, so this one the employee has to give you a new W-4 each year for this. Okay. So this last one, what happens if they give you the W-4 stating that they don't expect to owe, so you don't have any withholding for them? And then at the end of the year, they were wrong, and now they have $3,000 they have to pay in taxes. Do you have any culpability there? You do not. You're going off of what they tell you in the W-4. That's your responsibility. Now, if they try to do it again the next year, You should know better because they had to owe the current year, right? Or they had to owe the previous year. What if I paid sales tax on items that should be exempt? Oh, I've already answered that. Okay. All right. So for new hires, you'll need to go to labor.idaho.gov, and you'll need to report all your new hires to the Idaho Department of Labor within 20 days of hiring. Okay. You'll need to have them fill out an I-9, which is an employee eligibility verification form. Information about this can be found at uscis.gov. The I-9 is just required to show that the employee is legally allowed to work in the United States. And then you have your W-4s. So we have a federal and a state W-4 now. The days of the singular W-4 are over. We have one for both. We have one for state and one for federal. Tax withholding is going to be based on how they fill out these W-4s. They need to complete the forms for both the IRS and the state. Okay. For the IRS, if you go to irs.gov, go to Forms and Instructions, it's usually at the very top. Just download that form. For the state, we're going to go to Individual Income Tax for individuals, or look for Forms for income tax forms. And once we go there, we're going to go to Update W-4s for individual income tax. Click on the blue box, and it takes us here. So right now, the Idaho W-4 and the federal W-4 are both here. I don't know if the federal form will stay there forever, but it is right now. So you can download both of them there. Make sure that they read all of the instructions when they're filling this out. The instructions start at the above this and then wrap around to the back part of the page. Make sure they read all of it before they fill it out. Because if they fill it out incorrectly, they may end up owing a lot on April 15th. And as someone who's done this when I was younger and screwed it up, that is not a lot of fun. So to report this, you're going to use a 910. It looks an awful lot like the 850. It is not available online. We will send these to you. Please don't use a blank one that you found on the internet or one from a previous company. This goes for any of our forms. Don't use a blank one if they're supposed to look like this. If they don't have your permit number on there and then the routing information on the bottom, they're not going to go where they're supposed to go, so you won't get credit for doing it. Okay. If you lose them, please just get a hold of us. We can send you new ones. Not a big deal. Actually happens a lot. I work here and I've lost them a couple times. So for the 910, again, it looks just like an 850, but it is the Idaho withholding payment. It has your permit number, just like the 850, has the period that it is for, it has the due date, it has the payment amount. Now for the 910, this is your entire payroll. It's not each individual employee, so you lump them all together and this is how much you're paying. And then it has all the routing information on the bottom. It looks an awful lot like a check or a deposit slip because that's kind of what it is. If it doesn't have that information on there, you're not going to get credit for filing it the way it should have been filed. So don't use a blank one. If you've lost it or you can't find it, give us a call or come visit a field office or come visit us here in Boise, and we can get you new ones. Okay? Questions on that? Well, the other form around this is the 967. This is the Idaho Annual Withholding Report. It is due on January 31st. It does two things. It reconciles your income tax withholding on your W-2 forms with the 910s, and it serves as the cover sheet for the state copies of the W-2s. This is what it looks like. Make sure you have a withholding account. If it does not have this information there, or this up here, we will not be able to use it. You need to make sure you have a withholding account before you create a 967. Okay? We have some businesses who are like, oh, I forgot I needed this, so I don't have a withholding account. I've just been kind of setting money aside. That's not going to work. So there is a little bit of planning that has to go in for this. And then we have our W-2s. The W-2 is a document that you're going to give your employees so that they can complete their tax returns. So the 967s and the W-2s can be filed electronically by uploading something called an EFW-2 file, which is generated by your computer software, if you have it available. I would hope everybody does. Now, if you have more than 10 employees, you're required to file electronically with both the state and federal. So if you have 10 or more employees, you need to file an EFW-2 electronically. Okay. And then the highlighted portions in the W-2 are just the things that the state is looking for. That was a lot of information very quickly. So for withholding, just some things to remember. Make sure you're classifying your employees versus your independent contractors correctly. Make sure you report any new hires to the Idaho Department of Labor within 20 days. Make sure your employees are filling out your I-9s and W-4s and make sure they do them correctly. Make sure you have a withholding account, preferably before you have employees. And remember that account can take several weeks to get. Your 910s, work with your withholding account to send in the state income tax that were withheld for your entire payroll. And then the 967 is the annual form with the W-2s to report yearly to the state. Any questions on any of that? Okay, I have one last little bit for me here. We're going to talk about e-filing. Okay. You can file your forms 850, 910s, your 967s electronically free of charge. It says 50 here. That was recently changed, so that is now 10 employees with 10 or more employees working in Idaho must submit their W-2s and 967s electronically. You can't file individual and business income taxes using TAP, but there's a lot of stuff you can do. I said the magic word, TAP. This is how you can do all your reporting online. If you go to tax.idaho.gov, in the middle, towards the bottom, it's going to say log into your taxpayer access point. This is where you would start the process of getting a TAP account. We recommend that you set up the TAP account as soon as you get permits. You have to have the permits before you can set up the TAP account. It can take a little bit of time because there are some security procedures that take place, so don't think you can do this last second. It's going to take a couple of weeks, okay? But once you have it, here's what you can do in there. You can e-file your sales and use taxes that we just talked about. If you live somewhere where there's travel and convention taxes or an auditory and district taxes, you can e-file those. You can e-file those withholdings. If you have IFTA reports or beer and wine tax, you can e-file those as well. Lisa has a good question. Is employee withholding due monthly? It can vary. So there can be monthly filers, there can be quarterly filers. It kind of depends on your volume. The nice thing is that the forms will tell you when it is that it's due. If you're not doing a lot of withholding, so you don't have a huge payroll, or you're not doing a lot of sales, you're probably going to be quarterly. If you're going and doing a lot of business, then it will probably be monthly. Okay? And it can change year over year. If your business needs change, let's say you filled out your IBR and you're like, I'm only going to do $500 worth of sales per period. You know, it's not going to be a huge business. So they say, okay, well, we're going to have your permits. Here's your permits. You're going to file quarterly. As it turns out, you have captured the zeitgeist and you are doing $10,000 worth of sales every period. Well, they're probably going to say, hey, we're going to change you to monthly because they don't want all of that sitting there for that long, okay? So to make the short answer very long, yes, it could be monthly, it could be quarterly, but you will know on your forms. So we're back in TAP again. You can actually make payments as well as filing the returns. So all of those things that we talked about, you can make the payments. You can also do make payments for individual income tax and business income tax. You can't file the returns there, but you can make payments there. This is also where you will validate your permits. So validate seller's permits, cigarette permits or tobacco permits, you can validate those numbers there. What you can't do in TAP is apply for a permit. That has to be done in the IBR. You can't amend a return, and you can't file income taxes there. Speaking of income taxes, so far we've discussed topics that relate mostly to the Idaho State Tax Commission. So questions about those topics can be directed towards us, and I'll have our contact information on the last slide for you. Now, there are a few items that are of importance to business owners that are from the IRS, so I want to go over these just so there's no surprises. Okay? And most of that is self-employment tax. Self-employment tax includes FICA, Social Security, and Medicare. You have to pay this on your own if you're self-employed. Even if you're starting a business as a side business, this amount must be paid. When you're employed by another person, then usually those taxes are split between the employer and the employee. But as a self-employed person, you need to pay that full percentage. And it's recommended that you set aside 15.3% of your net profit to make sure that you have enough money to cover this tax. This is often paid quarterly along with your estimated federal taxes, and this is to the IRS, not through Idaho. So if you need more information about this, you need to talk to the IRS, and that's irs.gov. Okay. It's just kind of restating the whole thing. Just need to be aware that the payroll tax isn't the same as income tax, but you're going to report and pay your payroll taxes on your federal taxes. Okay. So that's a lot about taxes. Let's talk about saving some money real quick. And we're going to talk about deductible business expenses. So the IRS states that all deductible business expenses must be incurred in connection with your trade, your business, or your profession. They have to be ordinary and necessary, and they must not be lavish or extravagant under the circumstances. Okay? But if you can use them, I'd highly recommend that you do that. It will save you some money. For sole proprietors, you're going to complete a Schedule 1040 Schedule C to report your deductions. There are different forms for reporting your business expenses as tax deductions, and it's important to do your research to verify which form matches your business. Sole proprietors are going to use Schedule C. If your business is constructed differently, you may use a different form. So you're going to need to do a little bit of research to figure out which one you're supposed to use. This is what the Schedule C looks like. Other forms may have a similar layout, but they're going to have different line items. If you can use these, please do so. Make sure that it is a legitimate use. For instance, there is one here for car and truck expenses. So if you decided I'm going to start delivering product and I want to stand out from the other people that do this, I'm going to buy a Lamborghini and I'm going to deliver in a Lamborghini. So I can buy a $250,000 car, but I can write it off as a car and truck expense because I'm using it for business. Well, that's going to be considered lavish and extravagant, so I don't think you'll be able to do that. So it's perfectly fine to use these, just make sure you're doing it legitimately. If you're not sure, it'd probably be a good time to schedule a meeting with an accountant so they can walk through it with you. Okay? Lastly, record keeping. Tax agencies like Idaho and the IRS can normally audit back 3 years plus the current year. Okay? However, if you've been doing business without permits, we can go back 7 years. Okay? So keep them at least 4 years. Some of you might want to keep them for 7 years. I don't know. I'm just saying. So these would be things like receipts, check registers, sales and purchase invoices, tax returns. Now, regardless of your permitting, some records you may want to keep for more than 4 years. So like payroll records, contracts. Keep the contracts until 4 years after the close of the contract. Those exemption certificates that we talked about, the ST-101, the ST-103C, keep those until they're revoked because they don't expire. Okay? So as far as payroll records, your payroll records should include the name, address, and social security number of the employee, the dates of their employment, wages and taxes that were withheld, hours and work location, and then any relevant forms. So W-4s, W-2s, 1099s, and I-9s. Keep those for at least 4 years. So when I say record keeping and keeping things, it doesn't have to be paper copies. It can be scanned in copies, it can be electronic copies. The important thing is to have a good filing system. so that if you do get audited and somebody comes in and say, I need to see all of your payroll records for 2022, you're like, no problem. I'm going to go in here. I'll be able to pull those up for you. Would you like paper copies or would electronic copies work for you? That's when audits go really well, is when you have really good record keeping. Okay. When they go sideways is when people are like, I can't find this. I don't know where it is. I have 33 different filing cabinets, but I just stuff things in files. I don't know where anything is. That's when it gets stressful. Good record keeping makes your life fairly stress-free. So I really recommend doing that. Okay. Any questions about any of this? Because I am just about done. And we're going to hand off to Luis. Well, you can get in touch with Idaho State Tax Commission if you do have questions. We are on Facebook and Twitter, or I guess X now, Instagram. We're on LinkedIn. We're also on YouTube. I post a lot of videos out on YouTube, helpful information for taxpayers. And then we do have newsletters you can subscribe to. And I subscribe to them, and they are quite handy. Tell us about upcoming tax changes and that kind of thing. You can also contact us. Our phone number here in Boise area is 208-334-7660, or toll free at 1-800-972-7660. We have our website, tax.idaho.gov, that we've been talking about. And then we have a fax machine at 208-334-7846. If you want to send us email, the easiest way to do this is go to tax.idaho.gov. Click where it says contact us. I have it circled in red there. And that will take you here. Now, the very top of this page are all the self-help tools. If you have questions about payment options or refund status, you can click on the link and it'll take you straight to those. But if you scroll down from there, we have the submit a question. This is where you will send this email. Pick the bucket that most closely resembles your question. So if you have a question about liens, click on that box and then fill out the form. That email will go straight to the people who are answering questions about that particular topic. So it should provide a faster response time. Please be as detailed as possible. We may reach back out to you with additional information. But this is where that process will be started. And then at the bottom, we have our phone numbers again. And then I neglected to mention it, but at the very top of the page, over on the left side, it says office location and hours. We have field offices throughout Idaho. So we have a field office in Coeur d'Alene. We have one in Lewiston. We have our office here in Boise. And then going east, we have one in Twin Falls. We have a field office in Pocatello. And then we have one in Idaho Falls as well. And those people are there to help you. So if you have questions or if you need a replacement form or you need to make a payment, feel free to go check out their hours and their location and go visit them. They're all very friendly people and they're eager to help. Any questions about any of this? I'll tell you what, it is 10:01. Let's take 4 minutes. Be back at 10:05. I'll take a little 4-minute break, and I'll get Luis ready to go from the Idaho Industrial Commission, okay? Thanks.
Good morning, Steve. Can you hear me?
Yes, sir. How are you doing?
I'm good. Hopefully you're doing good, too.
Yep. It's a beautiful Tuesday. Well, the floor is yours, sir.
Perfect. Thank you so much. Good morning, everybody. As Steve mentioned, my name is Luis Estrada. I work with the Idaho Industrial Commission. And today we're just going to discuss a little bit about some facts for employers regarding the workers' comp insurance law. Here's a brief overview of what the presentation will be about. It will be broken down into 4 sections. The first section will do an overview of the Industrial Commission and workers' compensation as a whole. And then the second section will be relevant law and compliance processes. We'll discuss a little bit about the requirements for obtaining coverage and how to obtain a policy. The third section will be exemptions. Not all businesses are required to carry a work comp policy for their employees, so that would be covered in this section. And we'll wrap everything up with independent contractors versus employees, essentially just trying to get a better understanding or help you guys better understand what's the difference between both. Workers' compensation insurance law. The underlying principle of workers' comp insurance law is the existence of an employer-employee relationship. In other words, in Idaho, the workers' comp insurance laws aren't applicable to your business until you decide to hire an employee. With that being said, though, as I mentioned, not every business is required to carry a policy. So you may be one of the few lucky ones and not have to carry that work comp policy. So one less business expense, I guess. But the Idaho Industrial Commission is the state agency that's responsible for administering the workers' comp insurance law for Idaho. Essentially, what we do is we monitor and audit claims of injured workers and conduct judicial proceedings over disputed claims. And within the Idaho Industrial Commission, there are various departments. For example, we have the Employer Compliance Department, which what we do is we work to ensure that coverage has been secured to cover every employee in your business. That way, when a claim comes in, there's a policy to be filed against, to file that claim against. This ultimately protects both the employee and the employer. And how that protects both parties is, it goes back to what we call the mutual agreement, great mutual agreement. At one point or the other, there was an agreement between employers and employees to where the employer would provide that work comp insurance policy for their employees, and in return, any injury that happens would be filed through that work comp policy. That way, the employee is properly compensated for any time missed, the medical expenses, and it essentially protects you, the employer, from having to be filed civilly in under most circumstances. But that's how it protects both both parties. Within the Industrial Commission, we have other departments such as the Rehab Division. What they do is they work with all parties after an injury has happened. So they would work with the injured worker, the business as well, any medical staff, attorneys, therapists, the insurance carrier themselves. And their ultimate goal is to help facilitate that rehab process for that injured worker to get them back to work as soon as possible, preferably at the position that they were at before the time of the injury, or at the time of the injury, sorry. We also have our legal department. They handle any legal matters. We also have our benefits department. They deal with any issues that may arise, such as the injured worker not receiving certain compensation for certain medical expenses related to the injury. They will then work with the insurance carrier to make sure that that's properly paid out. And one thing to note too is you may hear myself or other investigators or workers for the Industrial Commission use the term insurance carrier, surety, insurance company. We're just referring to the same thing. It's an insurance company. So if you hear us use any of those terms, we're just referring to an insurance company. Workers' compensation insurance is a no-fault insurance which provides wage loss and medical benefits to workers with a job-related injury or disease, and again, emphasis on protecting both employees and employers, specifically employers from certain civil liabilities. Now, the big question is, who needs a work comp policy? In Idaho, any employer that has one or more full-time, part-time, seasonal, or occasional employee or employees are required to maintain a work comp policy unless specifically exempted by law, which again will be covered in Section 3. So if you have employees and they don't want to be covered by a work comp policy, unfortunately in Idaho that is not acceptable. That is what's called an invalid agreement. And it basically states that an employee can't waive the right to be covered by a work comp policy. It's, if you're required to have a policy, you're required to have it, regardless of whether the employee wants to be covered by it or not. And the other thing too is it is illegal to deduct any portion of the cost of the policy from the employee's wages. It is ultimately the responsibility of the business to ensure that that policy is in place. Here are some of the statutes that provide some guidance on work comp itself, specifically for Idaho. There are a lot more of them, and if we were to go through every single one, we'd be here the entire day. But for time's sake, we won't do that. We'll just do a little brief overview of the more commonly used or referenced ones. 72-209 and 211 This essentially states the employee's right to be covered by a policy and the employer's responsibility to provide the work comp policy. 72-301, security of payment and compensation. This statute provides guidance on how an employer can satisfy the insurance requirement, which is one of two ways. The first way, which is the most common way, is to obtain a policy directly from an authorized insurance carrier. Oh, that's the other term I forgot to add, carrier, or we're also referring to as a surety or an insurance company. So an authorized carrier. I do want to emphasize that state of Idaho doesn't issue policies. We leave that to the insurance carriers. There are 300 and plus insurance carriers that can write policies in Idaho. You can obtain our list on our website, or you can reach out to any of us, and we're more than glad to email you or mail you or provide you a physical copy of that entire list. But the first step to that is to reach out to any insurance agent. It could even be your homeowner's insurance agent, your automotive insurance agent. Essentially just reach out to one of them and let them know that you want to apply for a work comp policy for your business. They will then help you with that application process. Not all insurance agents are able to help you with that, but they should be able to refer you to somebody that should. And once a policy has been, an application has been submitted to one of the 300 plus insurance carriers, a policy would be issued then at that point. Once you pay the premium, you provide all the necessary documents that they will require. They will issue the policy. In order for us to obtain that policy information, the insurance carrier will provide us that policy directly. It's actually done electronically through a database that's called the NCCI. That's the National Council on Compensation Insurance Database, which is the requirement that Idaho has in order for us to officially accept that policy as proof of coverage. Again, you don't have to do that as an employer in terms of submitting it to NCCI. The insurance carrier does that for you. We just like to remind them to say, hey, don't forget to send that to NCCI. That way we show coverage with the Industrial Commission. And to be honest with you, in most cases, if you ever get a phone call or a visit from the Industrial Commission representative, it's usually because we haven't received the policy through NCCI. So it's fairly quick correction, I guess, a fairly quick step that they need to do to get that policy sent over to us. The other option would be to become self-insured, which this one's not as common due to a couple of different factors. For example, it does require approval by the Industrial Commission, and you also do need to have a certain amount of quarterly payroll reported for employees, which is a pretty high amount. It's, I believe, over a couple 100,000 quarterly, but again, not quite as common. Usually it's option number one. Failure to, actually let me backtrack on that. If you do apply for a work comp policy and you're denied coverage by 2 or more insurance carriers, you can apply for a assigned risk pool policy, and that's done through NCCI directly. Essentially what that is a policy, a work comp policy offered to employers or businesses that couldn't secure coverage through other carriers. There is a surcharge on it, so they do charge you a little bit more. However, we do accept that as work comp coverage, again, once it's filed through NCCI. But that's the same process with that. You can just let your insurance agent know, hey, I need to apply through the assigned risk pool through NCCI. So if you fail to secure work comp coverage, that's covered under statute 72-319. And failure to comply with the law is a misdemeanor, and you can be assessed penalties. The rate will vary either between $2 per employee per day or $25 per day, whichever one's greater. Essentially, a rule of thumb is if you have 13 employees or more, you're looking at that $2 per employee per rate. 13 times 2 is 26, so it's a little bit higher than the $25 per day. I also want to emphasize that when we do our calculations for the dates that there was no coverage, or we call it a lapse period, so dates that we couldn't verify coverage and there were confirmed employees for those dates, we factor in the whole 7 days in the week. So even if your employees are working Monday through Friday, we still count Saturday and Sunday, and that is because they technically are still employed by your business and can be called in to work those days. It's not like you're firing them at the end of the work week and rehiring them again at the start of the work week. I guess you could, but that'd be a little bit of a nightmare when having to fill out paperwork. But and then 72-311, notice of security. This statute basically states that all policies, whether they're brand new policies, canceled policies, policies that expired, or any modification to a policy, needs to be submitted to NCCI so that we can then receive the updated policy information. The cost of insurance, it's going to vary on a couple of different factors. For example, the insurance carrier might have different rates amongst themselves, but also the type of work that's being done, as well as the payroll that your business has. For example, a office employee or office employees under the code 8810 on average will cost you about 21 cents for every $100 in payroll for a work comp policy, whereas iron or steel construction workers that are working less than 2 stories, classified under the code 5059, on average cost you about $19.24 for every $100 in payroll that you report. So that is a big difference, but again, that is because of the type of work that's being done, right? The likelihood of an injury happening at an office setting, probably not as high as a construction site. And again, the insurance policies are obtained through one of the 300 plus authorized carriers that can be found on our website, which is www.iic.idaho.gov. And again, just contact any insurance agent for the application process. And in most cases, once your agent starts the application process, more than likely they're going to send the application to the State Insurance Fund, also known as SIF and formerly known as Idaho State Insurance Fund. I do want to clarify that they aren't a state agency. They're just a private carrier that have very similar name to a state agency, I guess. But there is that confusion. We get that a lot. But they are a private entity. So if you have a policy through SIF already and they cancel the policy, or you've been in contact with them and the policy canceled, and then a couple months down the road, we're notified, we reach out to you, you might confuse us with them and say, hey, I already talked to you guys about this. And then for our notes, we don't have anything that of said conversation happening. You're probably ended up talking to SIF, the insurance carrier, rather than us. But it happens quite often. But they are the most commonly used insurance carrier for Idaho, and they mostly work with small businesses and do about 70% of all Idaho policies. So more than likely, you're probably going to end up going with them. And then again, the assigned risk pool, if you get denied coverage by 2 or more insurance carriers, you can always apply through NCCI's assigned risk pool. And that surcharge is about 60%, so it is a little more expensive. But the good part is once you complete the policy term, normally it's a year for the policy coverage, more than likely they'll kick you out of the assigned risk pool at that point. But you'll be more likely to get approved for coverage at a much lower rate through one of the other insurance carriers. And to be honest with you, the assigned risk pool is mostly seen or used on brand new employers that haven't established that good pattern or good history of having an active coverage and paying it on time, or if by any chance your policy canceled for whatever reason and you have an outstanding balance with that insurance carrier, you want to make sure that you pay that off before you try applying for another insurance policy through somewhere else, because they will more than likely make you pay that or deny you coverage. So that's usually the most commonly seen scenarios for assigned risk pool policies. So as I mentioned earlier, not every business is required to carry a work comp policy for your employees. Your employees may be considered exempt from coverage, and which would be covered under Title 72-212. Essentially what that statute states is exemptions from coverage are specifically listed in this statute. However, Idaho doesn't provide employers with certificates of exemption. So in other words, if we determine that the employee or employees that you have are indeed exempt from work comp coverage, we don't issue a certificate of exemption. We essentially just document it on our database that your employees are exempt, no coverage is needed, and we essentially move on. Those exemptions are going to vary depending on the type of business or how the business is structured. For example, limited liability companies or LLCs, as well as partnerships. Any working member of the LLC or partnership that has legitimate ownership, can't be a member in name only, would be considered exempt from coverage. And what we mean by have legitimate ownership is that we need to see something in writing identifying that individual or individuals as LLC members or partners of the partnership in order for us to determine that they are exempt from coverage. And which leads to my next point. We normally verify the information through the Idaho Secretary of State, which we are aware that you're not always required to list everybody on your annual filings, but it is a good habit to do so for various reasons, such as identifying LLC members and partnerships for exemptions of coverage. The other thing with LLCs is if you are a single member LLC and taxed as a sole proprietor, your certain family members would be considered exempt from work comp coverage as long as they're living in the same household as the LLC member. And what we mean by that is if you're an LLC or you have an LLC and there's only one LLC member, and when you do your taxes, you're taxed as a sole proprietor or a sole prop or a DBA doing business as, any family member that is either within the direct lineage, so in other words, your spouse, your children, their spouses, your grandchildren, their spouses, your parents, your spouse's parents, would be considered exempt from coverage if they're living in the same household as you. Unfortunately, brothers, sisters, aunts, uncles, nieces, nephews, cousins would not be considered exempt. They don't fall under that direct lineage. But that is only if your LLC business has one LLC member and you're taxed as a sole proprietor, which then leads to sole proprietors. Right? So sole proprietors and employment of certain family members living in the same household are exempt. It is essentially the same thing as a single member LLC taxed as a sole proprietor in terms of the family members. So if you're the sole proprietor, your spouse, your children, your grandchildren, your parents, as long as they're living in the same household as the sole proprietor, they would be considered exempt from coverage. Corporations, any corporate officer that has at least 10% ownership of the stock, and if there is a board of directors, must be an active board member or director, would be considered exempt from coverage. If your business is a corporation and doesn't have a board of directors, we don't take that third part into account. We just go off of them being a corporate officer and having at least 10% ownership of the business stock. Some other exemptions are household domestic service. This is normally if you have a elderly family member or an ill family member that needs consistent caregiving, essentially, on a consistent basis, and you hire somebody to do that type of work for that family member. As long as the work is related to caregiving and is preferably performed in the premises of where that family member is located at, so normally their home, and as long as you're paying them from a personal account, in other words, you're paying them from a personal checking or a personal savings, but not an actual business account, they would be considered household domestic service. We do understand that not always the work will be done on the location of the family member or ill family member, elderly family member, etc. So, for example, if that person needs to go to the store and buy groceries for the family member, that's perfectly fine. We understand that still falls within caregiving duties. Casual employment, that's going to be employment that's not on a consistent basis and is not directly tied to the day-to-day operations of the business. The example I normally give is a small mom-and-pop restaurant that during the holidays they like to have some holiday decals painted on their windows, so they hire somebody to come in and do that for them. That person is considered casual employment as the work that they're doing is not on a consistent basis and it's not directly tied to the day-to-day operations of the business, in this case a restaurant. Employment of outworkers, not as commonly seen nowadays, but that is essentially work that is not on a consistent basis and is essentially a project that needs to be done, but you just don't have the time to do it. So for example, if you're a business and you want to do outreach, and so you decide, hey, you know what, let me go ahead and mail some coupon books or some flyers to, half of Twin Falls, right? You print all the flyers out, you have all the envelopes there, but you just don't have the time to stuff all the envelopes and mail them out. So you decide to outsource that to somebody or a couple of workers, and they do that for you. They essentially stuff the envelopes, they, seal them, essentially get them ready for mail to be taken to the post office. That is considered employment of outworkers because it's not on a consistent basis, and then you essentially just using them for this one-time service. However, as I mentioned, it's not as commonly used because of the way that technology has advanced, right? More than likely in today's world, if you're wanting to do outreach or promotions or sales or marketing, that's normally done online, right? So you're just gonna whether you send out emails, you print out flyers or whatever the case is, but it's mostly done electronically. So that's why it's not as commonly seen nowadays. And the last two other types of exemptions are volunteer ski patrol and officials of athletic contests. That one's pretty self-explanatory. So now we get to shift to independent contractor or employee. Employee misclassification, whether someone that works for you is an employee or an independent contractor, is an important distinction, though it can be tempting to try to save some money by classifying workers as independent contractors. Misclassification can have some serious financial and legal consequences. So what is the difference between both of them then? Well, an independent contractor is normally a person that can provide services or goods to other entities normally specified under terms of a contract. Generally speaking, independent contractors get to have full control over their schedule, the number of hours they're working, the jobs they accept and deny, their job performance, and ultimately how the job is done or completed. Whereas employees tend to work at a schedule that's required by their employer, and their performance is usually directly supervised by their employer. So think of it this way: if you have a remodel that you want to do for your bathroom remodel, right? You want to do for one of your bathrooms at your home. If you're like me, that's not my cup of tea. I don't know how to do that. I probably need to hire somebody to do that for me. I may buy the supplies, maybe the cabinet, the toilet, the bathtub, the towel, etc. Right? I may buy that stuff. However, I don't have the expertise to do that job, so I decide to hire a contractor. Right? Somebody's gonna come in. They're gonna essentially give me their quote. They're gonna factor in how much it's gonna cost for their services. That they are able to offer to other entities or other individuals. We may sign a contract. It may just be a verbal contract, which is perfectly fine. But the independent contractor or the contractor will get to decide, yes, this is the job. This is what it's going to cost. Either you take it or leave it. I say, okay, fine, that works. Or I make counter offer and say, hey, how about a little bit less. They get to decide whether they want to take the job or not. If they take the job, they're essentially the experts in that field, right? So I'm not going to be telling them how they need to do the job. I just want them to do the job. And I may tell them, hey, I want the wall blue, but I'm not going to tell them how to paint the wall. They know how to do that. I'm also not going to be providing them training. I'm not going to be providing them tools on how to do their job. I may provide them the paint, but that's not a big deal, right? That's perfectly fine. It's just I'm not providing them the major tools that they need to complete the job, such as the rollers, the tarps, the tape, right? That's usually normally done and provided by the contractor, as well as they're not having to provide me updates, right? So I'm not telling them, hey, every hour or at the end of the day, tell me where you're at. They might, out of generosity, might say, hey, I have about 2 more hours left on the job. I should be done by tomorrow. That's perfectly fine, but I'm not having them requiring them to provide me updates on a consistent basis. Whereas employees, such as myself, working for the Industrial Commission, when I got hired on, they gave me a set rate. This is how much we can pay you. Take it or leave it. They provided me the training that I needed to do to be able to understand how to do the job and how to do it efficiently. They provided me all the tools and equipment I needed to do that job efficiently. as well as I'm having to consistently provide them updates. So I'm having to notify my manager, hey, I got X amount of work done, or hey, I have a educational outreach tomorrow. So I'm having to provide them updates with that. So essentially, a lot of that comes down to who's controlling the individual's workday. Independent contractors get to retain that control. Employees normally have that don't have that control. That's on the employer side. So if we run into a situation or I guess not a situation, but if we run into a scenario where we're talking to a business owner, they say, yeah, I have 1 or 2 workers, but they're independent contractors. We ultimately get to make the determination, right, whether they're employee or independent contractor. However, we use what's called the right to control test. So the right to control test essentially is a test that's made up of 4 criteria that help us determine whether the worker is an employee or independent contractor. Considered collectively, these factors, again, distinguish the difference between both, but it doesn't prioritize a specific criteria that needs to be met. In other words, out of those 4 sections of the right to control test, we don't say, okay, you have to meet at least 75% of these to be independent contractor. We instead take it case by case. If we run into a scenario where we just can't make that determination, right, we're stuck in the middle, it's like, this right here indicates they're an employee, but this other part over here indicates that they're an independent contractor. We've been instructed by the Idaho Supreme Court to resolve that in favor of finding the worker to be an employee. And that is ultimately a better safe than sorry answer or determination. Because again, if you have an employee, you want to have that work comp policy in place. But in Idaho, if you don't have a work comp policy and you have employees and they get injured, there isn't no other safety net for that injured worker to be able to recoup all those medical expenses and loss of wages. They will then have to file a lawsuit against the employer to recoup that monetary value, and which again goes back to that statement I made earlier about how that work comp policy protects the employer from certain civil liabilities, which would be that in this case. So ultimately, we're resolving it to find the worker to be an employee as a better safe than sorry tactic or a measure. That way, it's better to have that policy in place. That way, it avoids headaches across the board. And as I mentioned, that right to control test is made up of four criteria or 4 sections. The first one is the direct evidence of right to control. So this is going to be a series of questions that we're going to ask the business or the business owner that help us establish who's controlling that individual's workday, right? So going back to that example, are you setting the time that they need to come in, the time that they need to be done by? Are you telling them, hey, you need to have this project done by X date? Are you having they report back to you on a consistent basis on the progress, right? So that's going to help establish who's controlling the individual's workday. The second section is your method of payment. This is going to be questions that ask how often is that worker being paid, right? Independent contractors normally don't have a consistent payment schedule. They may request full payment up front. They may request 50% 50% up front. The other 50% at the completion of the project. They may request it upon the completion of the project. Whereas employees, there is that consistent pattern of when they're being paid, whether that's every Friday, twice a month, every other Friday, right, once a month, but there's a pattern of when they're being paid. So those questions are going to help us establish that payment method. The third section is going to be your furnishing major item of equipment. This is essentially going to help us determine who's providing the tools and the major items that they need to be able to do their job. Again, going back to that example, for that bathroom remodel, I'm not going to be providing all the tools and equipment for the independent contractor, whereas at my work, yes, they provided me all the tools that I needed to do the job properly. And then the last section is going to be a right to terminate relationship without liability. This is going to be questions that help us establish, hey, what happens when the relationship is terminated, right? Can that person quit at any time and not have to be breaching a contract, which leads to the next point. This is normally where we see contracts in place, but not always will we see that. You may have a verbal contract, which is perfectly fine, but that's normally where those contracts come into place, is in this section. And this slide, sorry, it just shows some quick independent contractor facts. The IRS 1099 form, well, it is good to have it if you have independent contractors working for you or with you. However, keep in mind that that form itself doesn't indicate that they're an independent contractor, at least for work comp. That's where we go back to that right to control test. Exemptions, reiterating, there is no certificate of exemption in Idaho. Any worker we deem exempt from coverage is listed under that 72-212 statute. We just document it on our database and move on. Statutory employers, this is actually a lot more common nowadays, but any contractor that has subcontractors who have employees, that contractor may be liable for the compensation of those employees of that subcontractor who has not complied with the work comp insurance requirement. In other words, if you are, for example, a general contractor and you decide to contract the services of a couple of subcontractors, such as you're building a house and you decide to have a roofing company take care of the roofing project, plumbing company for the plumbing, electrical company for the electrical part of it. If any of those subcontracting companies have employees, they are technically the ones required to carry that work comp policy. However, if they don't and an injury happens, that injured worker can then file the claim on the general contractor's work comp policy and making the general contractor a statutory employer. However, any penalties that are going to be assessed for non-compliance with the work comp insurance law for Idaho won't be assessed to the statutory employer or the general contractor. It will go to the business that has the employees and no work comp coverage. So that's why you might be seeing a influx in a lot of general contractors requesting that you provide them a copy of a work comp policy in order to do work for them. And that is because they don't want to take that liability of becoming a statutory employer. Lastly, the cost of no insurance, reiterating again that in Idaho there is no public safety net for injured workers of uninsured employers. Without that work comp policy, the injured worker's recourse is to file a lawsuit against the uninsured employer. So it is very important to make sure you have a work comp policy if you have employees that aren't classified as exempt from coverage. These last two slides are just going to be some examples on misclassification. For example, on the left-hand side, we have a small claim, a foot crush. It would cost, in this example, about $8,738. If you're an uninsured employer, you're going to get penalized, which will bring that up to about $9,611. Whereas if you would have had the policy in place, located on the right-hand side, the premium of the policy would have cost you about $3,681. So it's a little bit of a difference. However, on a bigger claim, such as a knee strain, that's where we're going to really see the difference. This specific example costs $122,256. You include the penalty for being an uninsured employer, brings it up to $134,481, whereas the policy itself would have cost you a little bit under $3,800. It's a pretty big difference. With that being said, that's everything I have. There's our contact information. If you guys have questions down the road, please feel free to reach out to us. If you have any questions for me right now, I'll be more than glad to answer them. Otherwise, thank you for attending.
All right. Everybody hear me?
I'm assuming if I can, everybody else can too. Yeah.
All right. Well, good morning. I am Shanna Matson. I'm the director for the Small Business Administration Boise office. And what we're going to go through this morning is pretty much getting your business plan up and going because it's the roadmap for your business. I will just go ahead and get started. So business planning. Going into business, you need a business plan. It's a living document. It's something that small businesses should continually revisit because, like your business, things change. It's a tool to manage. It's your roadmap. It gives you the direction of your business, and it helps you set your goals, monitor your progress, and adjust course as needed. Business is the journey. A business plan helps you choose your route, your resources, what you schedule, and what metrics you will be following. So one of our favorite things we have over at Small Business Administration is failing to plan equates to planning to fail, which is the importance of a business plan. Not to mention, when you seek capital from a traditional lender such as a bank or a credit union, they will require a business plan. So this just kind of gives you a head start. And outside of seeking capital, it just, like we mentioned, it gives you a roadmap. It gives you a course to go, so you're just not kind of going up against your challenges blindly. So what a business plan will consist of, we'll kind of go through each part. You're going to have a value proposition, which is pretty much your elevator speech. Marketing plan, operating plan, financial plan. Those are the three big categories. You're going to also have an action plan, which explains what, who, when, why, and how. Your business summary. This is an overview of your company. It's going to explain what your product is, what you have to offer, and this is super important. How are you differentiated? There are tons of mechanics or bakeries. How is yours different? This is your value proposition, is something you will include. Your marketing plan is moving people to buy your product or service. What's in it for me? For whom does your differentiation have meaning? Where are these potential customers? How do you make them aware of your goods and services? So not only are you identifying your customers, but you're also outlining how you're going to reach those customers. And then your operating plan, the practicalities, staff, facility, location, investment, because you need to know how you're going to run your company. And if you seek that capital, the bank's going to need to know how you plan on running it. Your management team is a very important part of your business plan. Let's see. We're going to start with the marketing plan. That's the first component. Again, we kind of talked about what is your value proposition. What makes customers want to come into your shop versus the same product down the street? What are your products and services? Who are your customers? What are your demographics? Are you selling to 20 to 30-year-old men? Are you selling to 50 to 70-year-old females? You have to know who your customers are, how you're going to reach them. And this goes back to possibly your demographics. Is it going to be on cell phone apps? Is it going to be marketing mailers? How are you going to reach your customers? And what is the environment? This goes back to you have to know your competitors. How are you different than them? Operating plan. This goes to your people, how you are organized, what's your structure. Are you an LLC? Are you a partnership? Are you a sole proprietor? Are you hiring? How's your training? Who's your management? If you're a manufacturer, what's your plan, your supply chain, research and development, and your systems. You have to know your business inside and out. And this is another reason why a business plan is so great for a small business, because it just helps you sit down and identify every aspect of your company. Financial plan, very, very important. Choose a realistic time frame for your model. My background is finance. I used to do commercial lending. I came to SBA as a loan officer. One of the things we saw the most is small businesses, I think bankers call it rosy projections, but not necessarily realistic. And it does your business no good. It does capital applications no good if you're not realistic with your projections. If you don't know how to accurately project a 12-month or 3-year financial plan. You need to detail your assumptions, your unit sales, calculate your revenue, calculate costs, margins, overheads, profit and margins. We'll kind of go into this, but an incredible resource, we have resource partners at the SBA funds. They are the Small Business Development Center, SCORE, and the Women's Business Center. All of these are free, and they help you. They provide one-on-one trainings and counselings and mentoring to help you go through all of this stuff. All our websites also have fantastic templates. So if you're not sure how to do assumptions, you're not sure how to do financial planning, There's tons of resources and templates out there. Action plan. Focus on 90 days at first. Define who, what, and when. Prioritize your actions. What's going to drive your margin, which is your growth. Make you visible and relevant to your customers. How are you going to retain your existing customers so they keep coming back to you for that product or service? And how are you going to attract new customers? Is it going to be through social media? Is it going to be word of mouth? Business description. This will be, who are you? Describe your company. Kind of goes back to the elevator pitch. All businesses exist to solve a problem, meet a need, or fulfill a desire. Again, you need to know what's the value added of your business. Mission. What is the mission of your company? What is the business model? What's your overall strategy? And again, this goes back to knowing your market, knowing your competitors, and knowing your business. That's how you create that strategy. Strategic relationships, unique and expanding collaborative efforts. Who can you collaborate with as far as in the business community? This is another amazing tool, a SWOT analysis. Strengths, weaknesses, opportunities, and threats. Strengths are internal. What are your positive attributes of your small business? Internal to your business that are within your control. Weaknesses are also the internal. So what's very helpful when we do our SWOT analysis, internal is always strengths and weaknesses. External, outside your control, are your opportunities and your threats. So opportunities, what exists out there that's outside of your control? Maybe it's the uptick in Idaho's business climate. Maybe it was deregulation of certain industries. These are opportunities for your small business that are outside of your control. Threats, factors beyond your control. COVID is a perfect example of this. Economic downturns. You know, things are outside your control that can detrimentally affect your business. All of this you need to work through and think of as you're creating that SWOT analysis. Develop your business plan checklist. The best ideas come by identifying a need or solving a problem. A little bit repetitive, but here's what you should think about when creating that checklist. What's your main product? What problem does your product or service solve? Why is there a need for your business? How is it different than what currently exists? Who will buy it? How do you know? How do you find out? How do customers find out about services and products? Again, is it a social media strategy? Is it a mailing strategy? Is it radio ads? How much will they pay for it? And this is another great reason to use our resource partners like the Small Business Development Center. They'll help you with pricing structure. What's a good price point? What makes you competitive but still has your margins in it? What's your company vision versus your mission? Two different things. What you aspire is your vision, and how you achieve it is your mission. And what are your company core values? And once you know those core values, it's easier to build out your vision and mission statements. One thing, I love the bottom of this slide. Remember, your plan doesn't need to be a 30-page document. What you need to address is just those core areas, especially when you're going to a resource partner or you're going to a lender for capital. They just need to see that you know your business. Another thing, we talk to small businesses a lot. There's a lot of people that will charge you to do a business plan. If you don't have the time and it's an option, go for it. But a lot of times you are creating this business plan because it's your business. You're the one who has to do the market research. You're the one that knows your operation plans, your management team. We always recommend work with our resource partners. They help build this business plan with you. There's a lot of scammers out there. There's a lot of people that charge quite a fee for these business plans, and we have tons of resources in the Valley to help you guys do these business plans. So that's kind of my soapbox on that one. kind of repetitive, so I'll skip that. So let's just look at your marketing plan. Conduct market research. And I have some websites listed at the end of this section. But you need to conduct that market research to know what your market trends are and who your customers are. It also helps you understand what niche you have in that market, and you absolutely have to know what your competitor is doing. All this helps you to position your product or service to meet the customer needs. And one of the most important things is describe your product value. Who uses it, why it's needed, and why they need to buy your product or service. This is just a great little value proposition tool that you can use. Product that has your benefits and your features, and that equates to the customer experience. And here's your customers' wants, fears, or needs. What is your product or service meeting? Is it something a customer needs, or they have a fear and your product helps eliminate that? Identifying and defining your target market will help ensure you spend your resources appropriately. Again, if you don't have a plan, you're just kind of going willy-nilly, and especially as a startup business, you need to be extremely careful of your capital and your company resources, time and management. So create a product and service profile, identify your competitors, consider your market, and determine the most effective media resources. Here are some of the questions that you might think about when identifying customers. Ask them situational questions, problem questions. You know, even when people come into your store, we find a lot of small businesses, you know, just talking to their customers, they can do a lot of market research. Like, what do you like about our product? What would you like to see different? What product would you like us to offer? So have those conversations with current customers or online, you know, if you can do surveys in your social media. The more conversation, the more you can ask what customers want, you can help design your business plan. We've gone through that. Here is a list of fantastic market research. Most people don't think of the U.S. Census Bureau for market research, but they have just an amazing website. They did a presentation to my staff, and it was super interesting. They brought up an example of a small business wanted to open up a coffee shop. The U.S. Census Bureau was able to show them the traffic direction on a street so they could decide what side of the street they wanted their coffee shop on, because it would be a deal killer. If they were on the wrong street during rush hour, especially in the morning, and they weren't easily accessible for that coffee, they wouldn't have been competitive. The U.S. Census Bureau was actually able to track traffic patterns on that street. So an amazing resource. Bureau of Labor and Statistics is great. The Boise Public Library actually has a dedicated business team. Unbound is a library in Meridian, which is specifically a business library. So you have FedStat. Gem State is actually an Idaho business website. And our advocacy gives state profiles, which is pretty much demographics and customers per state. So those are all fantastic resources. So the marketing challenge, again, what makes you unique? Who is your target customer? Who is your competitors? What is your message? I think that is one of the most important ones, is what is your message? Because that identifies kind of everybody else. You have your elevator pitch and you're going to say, this is my product, this is the value added, this is the need that it meets, and this is how I'm going to deliver it. So everything kind of rolls up to what your message or what your pitch is. When you have a solid understanding of what currently exists, you're better able to identify the gaps and unfilled needs. Again, you need to know the right target market, because if you're out there and you're spending money, if you're spending your staff talent on the wrong demographic, you're missing the mark. You need to have your message down. You need to understand your brand. You need to sell the experience, not the business. very interesting. My one of my daughters works for Shields, the huge sporting store that opened this summer in Boise. She's college level entry job. She had 4 interviews, which blew my mind. 4 interviews just for the lowest position possible at Shields. But they are so focused on having customer service and having the best staff because they sell the experience. They're competing against Cabela's and Sportsman's and Big 5 and REI and every other sporting store. Their experience is customer service. They start it with their team. They understand what their selling point is, and it's the service. So it goes back to really understanding what your specialty is in your service or your business, what benefit it brings, and absolutely consistency. Using the right channels, how do you reach your customers? And again, all our resource partners have excellent workshops, trainings. You can meet with them one-on-one, how to create a social media plan, which is very critical in today's age where almost everybody does their market research on their phone. So definitely, I always recommend any stage of your business, meet with one of our resource partners because they work with businesses day in and day out, and they see every single struggle. They see every other challenge. They've come across everything. So they really help you prepare for what you don't know is around the corner. Again, generate leads. How do you do that? Advertise. Absolutely analyze your metrics. So if you're on Facebook, if you're on Instagram, if you're on TikTok, they all have metric analyzation skills. So you can see what your demographics are. You can see when they're opening or when they're clicking on your story or post. So that is critical. If you don't understand how to analyze your social media, reach out to one of our partners. They can help you tremendously. Cold calls, great champions throughout the community. They can help promote your small business. Team with affiliates. We love seeing this. If you're a bread company and there's someone in your business neighborhood that sells, I don't know, jams and peanut butter, why not collaborate with them? Why not make deals together? Refer customers to each other. The stronger you can collaborate and affiliate throughout your community, it helps your business. Utilize your website. Make sure it's current. Make sure your website can open up on phones easy. There's lots of websites that they create it, and when it gets to the phone, it's totally formatted differently. People can't follow it. People can't use the links. So make sure your website is usable both on PCs and phones. Marketing strategies and methods. Create messaging, taglines, product descriptions, call to action. If you're a groomer, what's your call to action? How do you get customers to bring their dogs into your grooming shop? Promote your product, create collateral. This is marketing literature such as brochures, flyers, releases, or other printed material. Develop your branding. Create brand awareness and how you distinguish this from competitors. Branding is hugely important because that's how people remember your business. People buy, I like the second point here. People buy based on emotion. How can you make a connection with the customer? And that kind of goes back to my story earlier with Shields. And I only know that because my daughter works there. But they have, you walk through the door and you're greeted. There's always people to help you. Chick-fil-A, they are also hugely known for their customer service. That makes that emotional connection with people. People enjoy going there because it's a positive experience. So how are you making your company a positive experience with your customer? And we discussed the last part, partner with other small businesses, do joint promotions or a long-term strategic alliance with a collaborative business. So kind of here it is in a nutshell, elements of a good marketing plan. Again, this rolls up into your business plan. You're going to have your business description, your market research, which includes your pricing analysis, customer profiling, competitive analysis, What are your marketing goals and objectives? What are your strategies and methods? What is your marketing budget to accomplish this? And how do you measure your success? The second main component of a business plan is your financial plan. It's a vital part of your business plan that shows how the business will generate and use money. Again, very important that you know this. It consists of financial projections, such as a sales forecast, expenses budget, cash flow statement, balance sheet, and break-even analysis. I will hit on these quickly as we go through this, but again, if you go to my website, sba.gov, as in government, it has tons of templates and tutorials under the Learning Center. Small Business Development Center, score.org, they all have fantastic templates to walk you through these financial projections. They help the business owners and investors to evaluate the feasibility, profitability, and risks of the business idea. It also helps the business to plan for growth, manage your cash flow, and allocate resources efficiently. If you understand your numbers, if you understand how much revenue is coming in, how much expenses cost, you're going to run your business much more efficiently than just throwing pennies into the well, hoping that it works out. It should be realistic. It should be based on sound assumptions and updated regularly. Again, if it's not realistic, you know, if you're thinking you're going to break even and be profitable 3x over in the first 2 months, how? If you're not realistic, it's gonna cost you. If you don't allocate budget based on realistic projections, it could really detrimentally impact your business. Profit and loss statement, one of the core financial documents, is your financial activity over a period of time. So you can complete a profit and loss on a monthly schedule or annually. A balance sheet is condition of the business as of a fixed date. How I like to break down a balance sheet is what you owe and what you own. So it's liabilities versus assets, and you want your assets to be stronger than your liabilities. Cash flow. This projects what your business plan means in terms of dollars. So it shows the cash inflow and outflow over a period of time and internal planning. So these are the 3 core documents that you should have in your business plan. And again, if you go to a lender, if you're seeking angel or VC funding, they're going to want to look at your financials, and they need to be accurate and they need to be realistic. Financing facts. Grants. This is something my agency gets called on quite frequently. SBA does not have general small business grants. We run one grant program, and it's for research and development. It's a very specific technical grant. It's called the Small Business Innovation Research. So say the Department of Defense wants to put a bid out for someone to develop safety on satellites. They will put a bid out and they will do an R&D grant for that. So it's a very specific grant. Other than that, SBA doesn't do grants. We get calls all the time that people heard that if they're a small business, they can get a grant. Or if they're Hispanic or a woman, they can get a grant. That is not through us. We don't do general grants. So getting that out of the way. We'll kind of look at how most businesses are financed. Only about 20% actually start with a bank or credit union loan. Your projections, this is kind of a hopefully understood, your projections must show repayment. Again, that goes back to making sure your cash flow statement, your profit and loss are realistic and they're accurate. Financing will take longer than you think. You can't have the need, go into the bank and think you can get a loan the next week. It will take minimally about a month. And that's another, I'll kind of go down another rabbit hole. That's really important of an SBA loan. We don't facilitate them with our office. What we do is we guarantee a lender. So if there's a loan and it might have just a small weakness in it somewhere, like maybe the collateral is not as strong as they want it to be, or maybe they don't show enough repayment, they can put a federally backed guarantee on it through my agency, and it will extend the amortization, allowing maybe more cash flow. Or maybe now with a federal guarantee on it, it strengthens that collateral. So 43% of my loans in fiscal year 24 were to startups. So that really shows the importance that lenders need that risk mitigation, and they do that through getting a federally backed loan. Here's all the different methods of financing that small businesses will do as they get up and going. Bank loans, we just talked about. There's microloans. There's a couple microlenders in the Valley. Janus does microloans, and Impact Business Northwest out of Seattle does microloans. We also have, they're called revolving loan funds. So what these are, they're kind of like microloans, but Certified Development Corporation, CDCs, Region 4 out of Twin Falls, they're throughout the state, but they get money from different agencies like USDA and Economic Development Agency, and some of these government entities will give loan funds to community lenders, and they can re-lend them. So they're a totally different entity than banks and credit unions, and their whole purpose is to give community loans to help strengthen those communities. So if anybody has questions, we'll have our contact information at the end, but that kind of falls into the same bucket as microloans. Seller financing, that's always a great option. We see that a lot. You know, the seller will carry part of the loan, or if they're selling equipment or real estate is typically where we see this. Credit cards, you know, and they're useful. We just always advise, kind of like a personal credit card, just stay on top of it because it can get you in trouble, but it's also a way to bootstrap your business to get up and going. But just, you got to keep your business transactions on your business credit card. You can't intermingle them with personal transactions. Same as a business checking account, same as credit card. Just keep them specifically to your business. Lines of credit, that's probably our most popular SBA loan that the banks do. So essentially a line of credit is, you know, you'll be extended $200,000 and you use it and you pay it off as it's needed, but it's just an operating line as you need it. Leasing or dealer financing, this is always a great option, especially if you're buying equipment. Dealer financing oftentimes has really good financing options, sometimes better than traditional lenders. Personal equity, a lot of times you don't know what equity you have lying around. Maybe your kid's gone and you don't need that third car. Maybe you have the easily accessible liquid assets. There's always personal equity that you can use in starting up a business. Friends and family, also called friends, families, and fools. It's another great option. A lot of businesses get started this way. We always recommend treat this money as you would with a bank. Make sure you understand a lot of times it's better just to have a note as well. Treat it as a professional transaction if you're getting it from friends and family. That way Thanksgiving holidays are a lot easier. Crowdfunding, that's a huge one that we're starting to see more and more of. And in fact, this year our agency actually made a change to our standard operating procedure that allowed crowdfunding to be used as equity down payment in a loan. So a lot of people think of crowdfunding as those emergency situations you see on Facebook where somebody needs help for medical surgery. But there's also another side of crowdfunding, which is business platforms like Kickstarter and Indie. And, you know, a lot of communities like to invest in businesses because it strengthens their communities, especially some of the rural and outlying communities. They want to keep their local downtown strong. So a lot of people will raise money crowdfunding because, again, it gives back to the community if they have small businesses there. Last is investors. Angel investors, VC, always keep in mind the equity component when you're looking at investors. VCs will want equity in your company. And once you pass a certain, kind of going off on a tangent here again, but if you're looking down that investor, keep in mind that once somebody owns more than 20% of your company, you can't get a traditional loan because most banks, I know my agency, anybody who owns 20% or more of a loan has to guarantee that loan. And investors will not guarantee somebody else's loan. So keep that in the back of your mind if you're going after that angel or VC funding. What lenders look for? The 5 C's are alive and well. Character, capacity and cash flow. Again, one of the biggest things, you can't get a loan if you can't show repayment for it. Collateral and guarantees, what are you going to use to secure the loan? This is easy when you're buying real estate or equipment, but if you're just seeking a working capital loan, how are you going to guarantee that? And again, this is where SBA comes in because we have a couple loan programs that under a certain threshold, we don't require collateral. Another reason why banks and credit unions will use our guarantee. Capital and contribution. How much skin do you have? The lenders are going to want to see this. They're not going to take on the entire burden of your loan. They want you to put in 10 to 30%. Again, if you have a federal guarantee behind it, you don't have to put in as much capital because, again, we're mitigating that risk to the lenders. But look for a minimum of 10%. And then condition, how well the business industry is doing, what you will use the loan for. And again, this is really important. When you go in and you're talking to a lender, if you're trying to obtain that loan, you have to have your ducks in a row. You're going to have to know exactly, you're going to have your 1 or 2 minute pitch about what your business does, you know, what the need for it, what size of loan you're looking for, and what you're going to use that loan for. I don't know how many times lenders will let it, and we even get the phone calls too. Hey, I need money. Okay, that's awesome. You know, what are you obtaining a loan for? Well, I don't know. I might start a dog grooming business or I might buy, you know, a used car lot. As you can imagine, the lenders aren't really going to, you know, be jumping at that loan. Or if they're like, I don't know, I might need $100,000, I might need $200,000. That shows the lender that that business is not ready for a loan yet. Probably hasn't done their business plan and has not done their financial projections. Again, the more prepared you are before going to a lender, the more serious they're going to take you and the quicker you can get that funding that your business needs. If you have questions in any of these categories, again, go see one of our resource partners like the Small Business Development Center or SCORE. Also, a really important thing, I don't think it's on this slide, as a small business, your personal credit will be ran along with your business credit. So if you have any credit issues, start fixing them or be very honest with your loan officer because the more they know up front, say you got a medical emergency, you went to collections, but now you're making a payment plan with a hospital or whatever, that shows that loan officer that, hey, this was a particular circumstances, it's been identified, and is being dealt with through a payment plan. When they take that loan into the underwriting committee, they can narrate that and build that in. But if you hide stuff from your loan officer and it comes out during a underwriting committee, it's going to look very negative and your loan probably won't pass. So I always say work on your credit, and if you do have issues, talk to your loan officer. They're one of your business partners. They're in it with you. They have to know everything. Especially with startups, your personal credit score is going to have more weight. As your business grows and builds their credit, we'll start kind of seeing the shift in how important that personal credit score is. But most lenders will almost always look at the business credit score and also your personal credit score. On the left-hand corner of the slide, you can see where you can get a free credit report every year. And this is per credit bureau. So you can pull it quarterly, and on one quarter, get it from Experian. On the other quarter, get it from TransUnion. It doesn't give you your score but it gives you an entire breakdown of your credit history. I think credit cards now are mandated to give you your credit score. So it's a quick way to check your score. But if you want a free credit report, this is a reliable, trustworthy one, and it's free. These are great. So business plan is a much more detailed and thorough. And again, if you go to a bank, you will need a business plan. But a business model canvas is a really great tool just to see the feasibility of your company. I always say it's a stage one, and once you complete the business model canvas and it's feasible, then you create your business plan. But as you'll see, the canvas starts, what's the problem? What's your solution? What's your company offering? What's your unique value proposition? We've covered dozens throughout this. What channels are you going to get to your customers? What are your target customers? What is your cost structure? And what are your revenue streams? So this kind of puts it in one lean model canvas. It gets it all in one page. It helps you identify it, and then you can get onto your business plan. And again, these templates are all over online. Growth Wheel, it's a visual toolkit for dialogue and decision making. It's used in touch points between clients and advisors. A lot of our resource partners use Growth Wheel. You'll see the 4 core components. It addresses customer relations, operations, your organization, and your business concept. It's just another cool tool to help companies identify and make decisions based off these core areas. What is the function of the business plan? We're going to pound this in today. It's going to be your vision, who you are. It's going to be your people, your organizational structure. And a lot of times, if you don't have your team in place, I always recommend build in who you're looking for. Maybe an ideal resume. If you're looking for a chief financial officer, what are you looking for in that position? So even though you don't have all your team in place, definitely identify what you're seeking in those open positions. You're going to identify your data, your issues, and your process. So the key elements you should include are a description of your product and service, your target market, your marketing strategy, your financial information, which includes those core financial documents, your business operations, and your business roles. This is also really important. You're not in this journey alone. You're going to have a team. On your team is going to be an accountant. As your business grows, we totally understand that at the beginning, you probably wear a million different hats, but you're going to need an accountant, an attorney, a banker, business consultant, and again, Small Business Development Center, SCORE, Women's Business Center can all be great business advisors, insurance agent, and industry-specific professional organizations. So if there's associations in Idaho, we highly recommend you join them because it gives you insights to your industry. It gives you networking. It gives you collaborating opportunities. It's really important to build your team as you're building your business because these are the experts. They're the ones who keep you out of trouble. This is an excellent website, IdahoBizHelp.idaho.gov. I believe Department of Commerce still runs this. So this wizard has 2 sides to it. You're going to have your small business wizard, which is more of the compliance side, the taxes, the regulations, licensing, permits. And it's very user-friendly. You're going to log in and say, okay, what's the size of your business? And then it's going to ask what industry it is. And based on how you answer questions, it will populate what the compliance items you need. On the second side of it, it's going to be your resource wizard. So it's going to say, okay, here's the bank program. Here's business incubators. We have an accelerator in Nampa. We have Trailhead, downtown Boise. Kiln is in Meridian. There's lots of business incubators in the valley. Chambers of Commerce, economic development, government procurement. So if you're interested in contracting with the government, who is the world's #1 purchaser of goods and services, there are resources to help you get certified to sell to the government. So if you want to sell to Mountain Home, if you want to sell to the Forest Agency, if you want to sell to INL, we can help you get certified to sell to federal agencies. Also gives you import and export trade assistance if you're wanting to get your product or service internationally, which is a whole new marketplace, so we strongly recommend that. Also talks about SBA loans and programs. As far as loans, I always tell businesses, don't get caught up in the details. You know, there's 3 or 4 different loan programs under SBA. That's the job of that lender. They're going to know what's best based on what your business seeks. I think it's a lot for small businesses to try and navigate all the different loan programs out there. That's what you're paying for the lender for. So just talk to the lender. If they're not familiar for some reason with our programs, let us know and we'll go talk to your loan officer. But most banks in the Valley are preferred lenders with us. Productivity. Measure productivity against industry benchmarks. And again, that's knowing your industry, maybe getting into some of those associations. How do you compare with your competitors? How can you improve if you're not hitting those benchmarks? What are your strengths and weaknesses to help you better feel the market? Set aside time each week to work on the important stuff. This is one of the things we really help small business owners with. Is it's so busy, especially as you're starting your business, but it's good to step away and work on your business and not just in your business. So being able to step away and looking at your company globally and how you can take it to the next step, which can be difficult when you're just working day in and day out in your business. It's helpful just to set aside the time to work on your business. How are you going to pivot? Changing business strategy without changing your vision. Again, pivoting is so important for small businesses. You know, we like to use the COVID example of everybody had to pivot, but there's even small pivots. You know, if you're on Broadway and they shut down a section of Broadway because Ada County is redoing the road there and you're shut down for 6 months, what are you going to do? What happens if there's other economic challenges that you didn't foresee? Knowing how you're able to pivot as a small business will help you get plans so when that time comes, you don't know what to do. Business tips. Business plans, again, they don't have to be complicated. You're not writing a 100-page document. It's concise and it just shows everybody in your business, you know, we saw that slide with your team, with your lender and your accountant and your business advisor. All it wants to show is that you know your business. You know what your product is. You know what your pitch statement is. You know what your competitor is. You know your financials inside and out. Again, this doesn't have to be complicated and fluffy. It just needs to show that you know your business. Vision statement, SWOT analysis, your financial and sales, your market. Break down big projects into small manageable steps. What we hear from small businesses a lot is they revisit the executive summary after they've built out the rest of the business plan. You know, they do their marketing strategy, they do their operations, they do their financial section. Once they have a firm understanding of that, then they go back and they build out the executive summary. So again, business tips, unlock and unleash innovation at your business. It helps you stay relevant, it helps you grow, it helps you prepare to plan, and it helps you be agile and inventive. Here we go. And again, the more you understand your business and the road you want to go down, you know your strategic plan, you know your opportunities, you know your strengths, you're going to be able to pivot and you're going to be able to grow that much stronger. When you make your goals, smart goals, be specific. You can't win with vague and idealistic goals. Put numbers into your goals and specify exactly what you want to achieve. Make sure they're measurable. You need to know if you have or haven't reached your goals. Attainable. Make sure they're attainable. And if you have to make a 3-month goal, and then a 6-month goal, and then a 9-month goal, that's what you need to do. But making unattainable goals, it just sets you back. Make sure they're relevant. Your goals have to relate to your business and be proportionate to the scale of your business. Again, that kind of goes back to those attainable goals. And make sure it's time-based. Your goal should be attained promptly, whether a month, a quarter, a year, but it needs to have a deadline or else you're not working towards anything. So instead of saying, I want to grow my business revenues this year, you can say, I want to increase revenues by $3,000 within 9 months by September 30th, 2025. Again, it shows there's a very quantitative aspect of that goal, there's a timeline of that goal, and it's realistic. So SMART goals are extremely important when building out your business goals. Here's what I've talked about, the whole presentation. These are our resource partners, incredible business advisors. I don't care what stage of your business you're in, they can help you. You have a business plan? That's awesome. Go have them look at it. You're struggling with your financials? Go have them help you. They are trained business advisors, and they're free. I like to say they're prepaid because you already paid for it with your tax dollars. Also, all these websites, SBA.gov, score.org, IdahoSBDC.org, they all have tons of tutorials, libraries, and templates on there. Women's Business Center just got appointed and they're opening November 5th, but I believe their website is up and going. So if you just Google Idaho Women's Business Center, they are launching, but here are the websites for all our others. Again, you're not in this alone. These people have seen every business challenge and they know how to help you. So take advantage of them. And that is it. And I have 7 minutes to give back to you. If you guys have any questions, just let me know. I think, Steve, it's back to you.
Well, thanks, Shannon.
Absolutely.
I don't see any questions. Tell you, let me stop recording. We don't need that now. Well, I think that's all we have for today.